Maybe. Hey, good morning. This is Chris with Suarez Home and Finance. You are on Coffee with Chris. And so we are here every Monday, 10 o'clock, and going through with different experts or an expert like myself that is telling you different parts of a loan process and things like that. So this morning we're joined by Sarah with O'Brien Delzer Insurance Agency. So Sarah and her family own this company, and they have been around in Hernando County for years, but they do all over the state of Florida. I've dealt with Sarah for eons, as long as I've been in Hernando County. I think I've dealt with Sarah, so probably about 16 years. So that's got to tell you something there. So we are going to have Sarah answer the 3 questions that she is asked most frequently. So, and then we'll post her contact information or whatever below as well. And if you've got any questions, just make sure and reach out to her. Insurance is very important whenever you own a home. It is, if you don't have it, you're in trouble. You need to make sure you have the right coverage, all of the above. So that's what Sarah makes sure that she does to protect her clients on her side. So we are going to add Sarah. There you are. So good morning, Sarah. How are you?
Hello. Good morning.
So tell us a little bit about your company, just real brief, and then, well, not real brief, but not 2 words or less, but tell us a little bit about your company and what kind of insurance that you cover, and then we'll go into those questions.
Okay, so O'Brien Delzer was started by my dad and his partner Delzer, and then my mom and I came on, and now my husband works there. We're a family business, and we do property and casualty. We do not do life and health. So we do homeowners, auto, boat, business, and we really work hard to be educated in what's going on in the field. And right now is a very volatile insurance market in the state of Florida. So I'm sure that that is something that's on everyone's mind right now. There's been a lot of cancellations, a lot of increases, a lot of changes to guidelines that people are running into when they're buying homes. So it's definitely at this moment ever changing and sometimes to keep track of. So that's something that people have to keep in mind when they're shopping for homes.
Right. Which that is one of with some changes recently. And I know that you've been on the phone with my office and just trying to get clients. The insurance has just been totally different than what we've ever experienced before, as far as what I've seen on my side. So, okay, so let's do, so we're like right in it. We're already going, and it's only 3 minutes in. So we'll see, and you'll elaborate on some of the other things. So one of the questions that you're asked mostly is, what can I do to lower my insurance premium?
Yes. So in particular right now, because of the volatility of the market and everything, I get this question a lot because premiums are increasing. The state of Florida is very litigious when it comes to insurance. We have 8% of the claims in the United States, 78% of the lawsuits against insurance companies. So, and that's been dramatic increases over the past several years. So insurance companies, whenever there's a lawsuit involved, the claim is double to triple. So that's why we're seeing the rates increase so much. And in particular with roof claims that are more on a maintenance scale instead of actual hail or hurricane damage.
Right.
So insurance companies are really tightening down on roofs. And one of the things that we can do is if the home, number one, if you're shopping for a house, a newer home is going to have lower premium.
Right.
Because of building code changes and roof age and everything. Well, roof age, you can get discounts with having an older home and a new roof, but building codes, that are applicable to homes built after 2002 dramatically reduce premium. However, if you're buying an older home, but it does have a newer roof, a wind mitigation inspection is key. And a lot of home inspectors will automatically do that with your home inspection because they know that it's something that may help you. But ask about it.
Mhm.
Because even if the roof is not, if I'm buying a home, I'm getting a wind mitigation inspection with my home inspection, because we don't want to be sitting there with discounts
Right.
that we don't have applied to our insurance because we just don't know about them.
Mhm.
Additionally, we can, for decreasing premiums, we can go with higher deductibles. But we have to keep in mind, anytime we change coverage to decrease premium, that means that we're going to have more out of pocket at the time of a loss.
Right.
So I strongly recommend looking at things like getting wind mitigation inspections, even if you're not buying right now, and say you're renewing your insurance.
Mhm.
A lot of people who've had their home for 10, 15 years didn't have one of those done because it wasn't a big thing. Premiums were lower. Sometimes people just opted not to get one done.
Right.
But now it might be a good idea to try and get those premiums back down.
Right. Which that's a lot of times we're seeing those with the with like what you said, the inspections and stuff like that or whatever to get those down. And I've seen them anywhere between $300 a year to $1,000 a year. So it's,
Yeah, it's huge sometimes.
yeah. So for the cost of the wind mitigation credit or the wind mitigation report, it way outweighs savings. Now, how long is a wind mitigation report good for?
They are good for, and this is a state form, so it's not something that the insurance company said. It's actually set by the state of Florida. The inspection is good for 5 years or material change to the structure.
Okay.
So if you have a wind mitigation inspection done and we apply it to your policy, that's going
Mhm.
to stay on there until we rewrite the policy, or realistically till we rewrite the policy. But if we say you have your policy and 2 years down the road the premium goes up, so we look at rewriting, and we find a company that offers a less expensive option for you, we can
Right.
use that wind mitigation inspection again at that time, as long as there's been no material change to the structure. So in other words, the roof hasn't been updated, you haven't made any additions to the home. We can use that same wind mitigation inspection. However, if you've had the roof done or you've added on to the home, so there's been changes, then you would have to get a new one.
Okay. And
But
now,
5 years if nothing changes.
okay, so 5 years, and just real quick because you're saying on that, how long? So a 4-point inspection, how long is that good for? Is that the
Okay,
same?
so a 4-point inspection does not make any premium difference to your policy, but it is required to write coverage through most company. Well, depending on the age of the home, some of them
Mhm.
as early as 20 years old now. And the agent will always tell you if you have to have one, but a 4-point inspection is only good for 1 year.
1 year.
And some companies are even starting to require them to be newer than that.
Oh wow. Okay.
So that's along the lines of some of the changes that have been made
Mhm.
recently. Some companies are requiring them to be less than 6 months old.
So is that
Um,
the insurance company, the underwriter, or is that you as the agent?
that's the insurance company. The insurance companies regulate the requirement on 4-point inspections.
Okay.
The state regulates what's required for mitigation inspections. The 4-point inspection is informational only. It's not required for discounts or anything, but it tells the insurance company the current um, information about the heating, plumbing, electric,
Mhm.
and roof. It tells them the condition, if there's any leaking or fire hazards. And that's why it's only good for 1 year, and even less now
Right.
for some companies, because they want to know more recent information to make sure that they're
Right.
not getting into something that is going to be an issue because of prior damages.
Right. Okay. Which that makes sense. I just wanted to throw that in there because I know that
Hmm.
that sometimes expires too. And so okay, so wind mitigation is 5 years, a 4-point is 1 year or less, depending on the company.
Yes.
Okay. Okay, so the second question is there any way to get insurance to buy a house with a contingency of a roof to be updated? So I have that all the time. And so people are buying a house and the roof needs to be updated and they're ready to do it. But if you're buying a house, sometimes you can't do the roof before closing But whether the seller is giving a seller concession to go towards the roof, whether I'm doing a renovation loan or whatever the case is, sometimes the roof or a refinance, sometimes the roof is done after closing. So how can we get that? How does that work?
Exactly. And we're running into that a lot now because there are some insurance companies that won't take a roof over 5 years old. Now,
Right.
we don't
Over
tend
5?
to, hmm?
Over 5?
Yeah, we have
Oh my God.
some are only 5. And part of it is because it's not that they're worried about a roof that's 6 years old. But what happens is insurance companies would prefer not to write a policy this year that they are just going to have to non-renew or cancel 2-3 years from now.
Wow.
So their guidelines for writing a new policy are going to be stricter than what it would be for someone to renew. But we've always got citizens that will take a roof as long as it's in good condition and has at least 3 years remaining useful life. So that's going to be the majority of the time if we have somebody that has a roof that's over 15 years old, particularly if it's shingle, but it does have to have at least 3 years remaining useful life and no leaks or anything. However, we do run into situations where the roof does not have 3 years remaining useful life, or it has some kind of deficiency damage, like maybe it has cracked or missing shingles. And while it's understandable that you cannot replace the roof before you own the home, and sometimes the seller's just not willing to do it. Unfortunately, the days back when I started, we had some leeway there, and I could call an underwriter and say, hey, I've got a roofing contract for this customer. They're going to have it done. They've got it set up for a week after closing. Can I bind this? And I could get exceptions. A lot's changed in 20 years, and we just don't have those underwriters willing to make exceptions anymore. So really the only option I would have, and it would depend on how much issue there is with the roof, would be to go with a vacant renovation policy. And that can create problems when it comes to the financing because of the cost of it.
Right.
Most lenders are going to require 12 months of insurance. We can do vacant renovations for 1 to 3 months. We can do monthly, whatever amount of months you need. But the lender is going to want 12 months. And so sometimes that can push the debt to income out of line.
Now, what is that policy called again? Because I have a couple that's like that right now, because that's happening more and more.
Yeah, it's a vacant renovations.
Okay, so it's not a builder's risk, because that's for like new construction, building new construction.
Right.
So it's a vacant renovation. Okay. So,
And
okay.
one important contingency on that is that it does have to be vacant, and it's not going to include coverage for a roof that's got damages. So I don't know how the lender is going to feel about that. I've had some lenders take it, but I mean, if the lender is going to accept, do the loan based on, and that's something that I think is sometimes difficult for us because we're people in the office talking to real human beings and recognizing things that make sense. Like if the lender is loaning the person the money to get the roof replaced because they know it needs a new roof, it would make sense that they would let them have a vacant renovations policy for a couple of months while they do that. But it doesn't always work out that way. Sometimes they want us to be able to cover it like it's already done, even though it's not, and they know it's not because they're lending. And it's the same thing with the insurance side. So that can be frustrating, and that just puts us in a position that we have to work together to get things done for people.
Right. Well, and the thing with that though is that you're saying that it's got to be vacant. And so for me, they need to occupy the house within, say, 30 days, 60 days, whatever. And so the house can't be vacant. So in that policy, is there something, and I'd have to find out on my side, but is there something that you said, okay, the house has to be vacant? Like, is it that the house has to be vacant while the roof is being done?
It has to be vacant while the renovations are completed for a vacant renovations policy.
Okay.
And then we would rewrite it to a regular homeowners or dwelling fire landlord policy. So
Right.
just during the time of the vacant renovations or the renovations, does it have to be vacant? Um, and that's specifically for that program that would allow us to do something that's having the roof replaced.
Now, is that what you used to call like a Lloyd's of London?
Lloyd's of London is the carrier most often. There
Okay.
are other carriers that offer it as well,
Right.
but most often Lloyd's is the one that
Okay.
ends up being the best for that.
So it's there's a possibility there, but it's tricky depending on the financing and all of that kind of stuff.
Yeah,
Because again,
because it's expensive.
oh,
It's an elevated risk, so it's
right.
expensive to do it that way.
Now with that kind of policy, that is that they lose, if I'm correct, 25% of that policy, regardless. So
It
even if
is
it's within 30 days, they still have to pay 25% of that policy in full or get
it's a
whatever.
minimum earned. Yes, it's a minimum earned policy of 25% for anything for an annual policy,
Okay.
or fully earned for anything from 1 to 3 months. And that's where it can get tricky, because if we can get a lender that would let us do the coverage for just 2 months, then
Hmm.
they would just pay the 2 months or 1 month even. I have some people who, if you have cash buyers, then it's much easier.
Right.
They can do a 1 month policy to get that roof done and then switch over. And so
Right.
it's a lot less cost concern, because the premiums, I mean, it's still expensive for 1 month of coverage, but it's not nearly as bad as doing it for the year.
Right.
But lenders, and understandably so, I understand why they want to make sure that they have annual coverage, but it's much more expensive, and it does have a minimum earned premium of 25% through most carriers. So you pay for that 3 months, whether or not you use the full 3 months.
Right. Which on the financing side, with anything that I've ever dealt with before, you have to have a 12-month policy. And
Hmm.
so where we just, yep, you've got a concern as far as debt ratio is concerned because it's a higher premium. Yes, you're going to probably, you're going to lose 25% of it, but this is the only way that we can get it done without the roof and so on and so forth. So that's also where I kind of look at things and say, um, okay, is once we get the loan approved and get the appraisal back, is the seller willing to do have the roof done just before closing, and then the roofer's paid at closing and then it's done, but I assure everyone that we are closing, and that's the only way that I've been able to get around that in some instances. Just
That's an awesome.
yeah, so it's I try to go outside of the box. What can we do to get it done, and in order to make sure that we have a reasonable premium and not have to worry about it later, and the seller's not stuck with the bill because we're going to close.
Yeah, because I understand that it's tough as a seller to put that investment into it
Hmm.
when you're trying to sell. I understand it, but it does make it much more difficult for the buyer if
Right.
it's not meeting minimum requirements.
Right.
Um, so it will make it more difficult to sell, because you can find yourself with a buyer that loves the house, gets all the way up to, gets approved for financing and does invests all that money in inspections and everything to only get to the
Right.
insurance part and not be able to get insurance for it, and the whole thing can fall through that way.
Yeah, which that's not good at the end. That's very stressful at the end.
And it's
Very, very stressful.
devastating. It's everyone. I've been there, where you fall in love with the home and you're picturing your family living there. And mine was back in the days when it was bank sales, and
Yeah,
they just kind of, you had to like hope that some guy behind a desk at a bank would like approve your offer. But it's devastating to get to that point where you feel like this is actually going to happen, and
yeah,
then something. And I hate being the person that has to say that I can't do it, because I know it's heartbreaking.
right. Yeah, you and me both. Yeah.
Yeah,
Sorry, you can't do this because the insurance is too much and you can't afford it. Yeah.
yeah.
Even though in 30 days you can't afford it. It's tough. It's tough. So your third question is why do I get a bill when my insurance is paid through my mortgage?
Yeah, so this comes with the escrowing, and I'm sure that you explain this to people when they're getting their loan, but the insurance, as the insurance rates increase, unfortunately, if your insurance is escrowed, that is going to impact your mortgage. And a lot of times people don't realize that your escrow, they collect this year to pay the renewal bill for next year.
Right.
So a lot of times people think that they're paying monthly and it goes right to the insurance company every month when they pay.
Yeah.
But they're collecting. So say if your mortgage company is collecting $50 a month, they're collecting that up. You paid at closing for the first year, and then they're collecting whatever amount they need every month to pay that same amount and a little more just in case.
Right.
For next, if the premium increases drastically or your taxes increase drastically, they have to make up not only for the extra that they're actually paying on the bill, but they need to make up the extra to collect on next year.
Right.
So they actually have to end up collecting, if you're short $20 a month, they're going to have to collect $40 a month to make up for the extra that they paid that they didn't collect for the year preceding, and to make up for the next year. And I think that that's one of the biggest things I get. And it's kind of hard to explain in this format when you don't have the exact numbers of what people are dealing with. Right. But, and I'm sure you tell this to people, but cannot stress enough, make sure you file for your homestead.
Yeah.
Because I run into that a lot where people did not file. They forgot. Once they call me and they say, hey, my escrow, my mortgage payment went up ridiculous, blah, blah, blah. And I go in and I will, if their insurance doesn't line up with what they're saying, their stuff increased. Right. I will go look at the taxes, what the difference was. And I'm not a tax expert, so I can't really go into too much detail, but I can tell them, like, here's what your taxes were when you closed on this house, and here's what they are now. And I've had a couple of people who, when I said, you're not getting your homestead credits, they go, oh my gosh, I forgot. So make sure you do that, because
I had a real estate agent that I was at a closing, and I did a loan for her. And I went through all of that because I give them the homestead exemption form and, make sure and say, you've got to file it, blah, blah, blah. She's like, Chris, I'm a real estate agent. I know how to do that. Not a problem, whatever. I got it. You're telling me, you're preaching to the choir, basically. Not those words, but you're preaching to the choir. Talked to her the next year or so. She totally forgot to do it. And so her taxes went up, and she's like, oh my God, you even told me. And I said that I was, yeah, don't worry about me. I know what I'm doing. And she totally forgot. So anybody will forget. And I've had clients that forgot also. But yeah, it makes a huge difference, a very huge difference. But so another thing with that, whenever you're talking about, getting a bill, the other thing is that whenever you get a cancellation notice in the mail, and I go through this as well, is that you need to immediately call your insurance agent because something is wrong. So you get a cancellation notice. So if you got a cancellation notice like not long after we closed, normally it's just the check and the payment is crossed to the mail. So you can call Sarah and say, hey, did you receive the check from closing yet or whatever, and then you're good. If you get a cancellation notice in the mail and you don't call your agent and your insurance is canceled, then your bank will do forced place insurance, which I had my bank years ago mess up and said that I didn't have insurance, and I did. And they tried to charge me like $15,000 a year for insurance. So it is huge, the amount that they're charging you for forced placed insurance. So
yeah, and I got sidetracked a little, but to answer the original question, because I don't think I did, you will always get a copy of anything that we send to the lender. As the homeowner, we want to make sure that it's coming due. and so that you have it for your records, because it also is going to include your declarations page for the renewal and everything like that. And very important. You get anything from the insurance company that you don't understand, call me. I have people all the time say, I'm so sorry, I don't mean to bother you. It's not a bother. I would so much rather have somebody call me with something that may be a concern than somebody ignore something and we find out about it 3 months later when it's too late to do anything to fix it, or after it causes trouble. Like, say, for example, if you get a letter from your mortgage company, if you get a letter from your mortgage company and it says something about insurance on it, we want to take care of it now, because sometimes that happens. I mean, these mortgage companies, they're dealing with so many documents every day. So, and the insurance companies mailing these documents, which stuff can get lost in the mail. So if you get something from your mortgage company that says, we don't have your insurance information, but you know you have insurance, don't just ignore it because you know you have insurance. Because then you're dealing with, oh my goodness, I have to pay an extra $500 on my mortgage payment this month while they get everything corrected. Because we didn't deal with it right away. So anytime, it's always better. I like chatting with people, so it's always better to call me and let us address it. And if we end up finding out that everything's good, then great. We just got to say hi. And if we have to fix something, we can fix it before it becomes a problem.
Which that is so key. I've actually had you guys have to fax my mortgage company several times to say, yes, she does have insurance. So no, don't force place insurance. So it is definitely a big deal. When you get your renewal policy in the mail, I am terrible about not always looking at it, but make sure and look at it. And like what she was saying earlier is make sure you look at it, but also, do you qualify for wind mitigation credits that you didn't before, or something, or whatever the case is, so that you can get those. If you have an alarm, I've seen an alarm, I've seen it save clients like $80 a year or something. I mean, it's not a big deal.
Yeah, it depends on your premium because it's a percentage. It's not huge, but if you're going to have, you don't get the alarm to get the discount, but if you have an alarm, you want to get discounts for anything that you can. You don't want to be sitting there paying for something that you don't need to. You know, I always tell people, it may, even if it's only $15, it's $15 that you don't need to pay to someone else.
Yeah.
You can put it towards something else, and it's not giving you anything. If it was giving you something, then it's worth it. But if you're paying $15 extra for something that's not any different because you're paying extra, it doesn't make any sense. And one other thing is very important. If your mortgage companies, if your mortgage gets transferred or sold, let us know, because that's one of the big things that we run into too, where a mortgage company ends up forcing insurance because they don't have the proof of insurance, because we didn't know that it went from Bank of America to Carrington or whatever. And that also can cause your policy to not get paid because we don't have the right place to bill. And they don't tell us. Well, sometimes they send you a letter to tell you to tell us, but a lot of times they just don't. I think that they expect customers to know to tell their insurance. The bank, and I don't know why, but
well, and I've never even thought about that though before, to even tell my clients that. So that's good to know too, because a lot of times things are sold over and over again, and so you got to make sure that is done. So that's good to know as well. There was something I was going to ask you, and I don't know what it was. We talked about the roof. We talked about lowering your, because if you own a home, you now need to contact your car insurance, because you can get a discount on your car insurance because you're a homeowner. Yes. So that is something that a lot of people don't know. And so like I give a folder at closing, and so it's actually got that in there too. It's, if you have an alarm, then you can get a discount. Then you should be able to get a discount. I never say for sure because I don't know. But also if you are a homeowner, then you need to let your car insurance know so you get a discount there.
Yes, ma'am. And even if they're not with the same company, a lot of companies that write auto insurance in Florida don't write homeowners insurance in Florida, or they may not be competitive for your homeowners. But even if you don't have them with the same company, you do. Auto insurance is based on, well, all insurance is based on statistics and liabilities. So when it comes to car insurance, it's going to depend on what kind of vehicle you drive and how much damage it can cause or whatever. But also a lot of the impact on a car insurance policy is your risk as a person. And statistically, someone who is more responsible is less likely to have an accident and make a claim. I mean, accidents happen, but statistically, the more responsible the person, the less likely to have an accident. And home ownership, as we know, is a huge responsibility. And once you get to that position in life, statistically, you are on that more responsible level and you get a discount.
Right. You get a kudo.
Yes.
Well, I appreciate you being here. I'm hoping that people got a lot of good information from here. So Sarah is with O'Brien Delzer, and we'll post her information here as well so that you've got that. And Sarah, what is a good phone number if anybody needs to reach out to you as well?
You can reach us at 352-683-6266 or toll free 888-559-6266.
Okay. And you do handle the state of Florida, correct?
Yeah, we can do anywhere in the state of Florida.
Okay. All right. Okay. Well, I appreciate you being on here with me this morning. Good information. I learned stuff too, so that's a good thing.
Thank you for having me.
Absolutely. So I will talk to you soon.
All righty. Have a good day.
Have a happy Monday, guys. Talk to you later.
Bye.
Bye.